This is Ryan Coombs, Vice President of Research and Strategies at Carty & Company. Here's your weekly market update ending the third Friday of April 2016. Consumer confidence unexpectedly fell in April to the weakest level in 7 months. Americans were rattled by unsatisfying wage growth and concern over the upcoming presidential election and how it would impact the economy. The University of Michigan's preliminary sentiment index for this month fell to 89.7, the lowest level since September and down from 91 in March. The gauge averaged 92.9 last year, the best annual performance since 2004. Payrolls increased within 37 states in March, and the unemployment rate declined in 21, capping a strong first quarter for the U.S. labor market. Maryland showed the biggest advance in employment, with a 19,300 increase. This was followed by an 18,300 increase in Ohio, figures from the Labor Department showed on Friday. Jobless rates in South Dakota and New Hampshire were the lowest in the country at 2.5% and 2.6% respectively. U.S. industrial production fell 0.6% in March. That's less than the consensus estimate of a 0.1% drop predicted by 79 economists surveyed by Bloomberg. Following a downwardly revised 0.6% decline in February, output has now fallen for 6 of the past 7 months. In fixed income, Treasuries rose on Friday, led by longer-term debt after the report showed U.S. manufacturing output unexpectedly fell last month by the most in a year. This underscored traders' views that the Federal Reserve faces an uphill battle in raising interest rates. The gap between yields on 2-year notes, which are more sensitive to the outlook for Fed policy, and 30-year bonds, which are influenced by expectations for inflation and economic growth, fell for a 4th straight day. Wall Street's biggest bond dealers bought the lowest ever share of 30-year U.S. government bonds on Thursday. Benign inflation and negative interest rates around the world pushed other investors into the longer-dated treasuries. Primary dealers, which are obligated to bid at U.S. debt auctions, were awarded just 24% of the $12 billion sale. Foreign central banks and mutual funds snapped up 65%, the 3rd highest share on record. U.S. shares may be rising broadly enough to breathe some new life into the 7-year bull market. The Standard & Poor's 500 index closed above the upper limit of its 20-day Bollinger Band this week for the first time in 18 months, its longest ever run beneath the chart line. Used to predict stock movement, Bollinger Bands are calculated by plotting standard deviations, which is a measure of volatility above and below a security over time. The cumulative NYSE Advanced Decline line is on the upswing. This measurement calculates the running total between the number of New York Stock Exchange-listed companies rising and falling daily. The indicator rose to records twice this week, according to data compiled by Bloomberg. This is a bullish signal and one we will continue to monitor. That sums up your weekly market update ending the 3rd Friday of April 2016. For more details, please visit our information center at www.cartyco.com, and for real-time updates, follow us on Twitter at Fixed Incomes. Thanks for watching and have a great week.